Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look at these markets, but before we do that, folks, I want to make a few comments here. You have to be really careful about what you hear in the news and also what you hear on TV and read on the internet. I mean, there's some crazy stuff out there. This morning, I heard on the guy from Ryanair, the CEO, said this thing in Hong Kong or in China was pretty much taken care of, and that they were not concerned about it at all. And he might be right, but maybe if he's wrong, I mean, it's just amazing to see if I'm energized. Yeah, well, and my energy's good. Yeah, I'm hanging in there pretty good. Had a good night's sleep. Everything's fine. Anyway, the picture that I showed here was one from an internet cafe over in China. So I thought it was rather funny to bring it up. The second thing that came up is that there was an article about the fact that there were only 600 coffins in Hong Kong. That's not unusual, folks. There's 11 million people, and because land is so expensive, there's probably only about 600 coffins there because almost everyone is cremated. So that's something that you got to think about. But boy, there's some really crazy stuff out there. I've never seen anything like it. And I guess it's related to the fact that we've got these different things going on in the world that are really crazy. Now, I wanted to mention a little bit about the stock market. We stopped, really right, it looks like on death's door on Friday. But I wanted to show you what we were looking at here in this, because this is such an important point that we're going to be watching here in the stock market, folks. This is going back to December the 2nd. You see that the low on Friday at 28,100, that was a 61% retracement from the high to the exact tick. And so far, we've rallied a couple hundred points from that level, just like we did in the S&Ps, rallied about 30 handles and about 80 handles in the NASDAQ. So the reason why this is important is because of the strike price of 3,200. The 3220 stock strike price in the options. That's two standard deviations from the mean, and that's the fail-safe that these option sellers have. If it goes beyond two standard deviations, they're in big trouble, and that's when you get these big moves. Now you have to give the stock market a lot of credit. It's acting extremely strong, being up 100 and some points, up 200 and some at one time, in the face of China being down 8%. And as Tommy mentioned, there were so many stocks that were limit down, and they didn't bounce. I mean, they opened down there, and there was not much going on, and China pumped in a whole lot of money to try to get this thing, giving it some pretty good support. Now, I don't know what's going to happen next. All I know is just be really careful, be flexible, and use stops and pray for the best. That's all you can do. Yes, you don't know, Dennis. It could be a 1 or 2 day bounce from here, but watch it very, very closely. The pattern itself has completed what I think is a pretty big top, but whether that's going to be the case or not, I'm not 100% sure. But the good part of that, nobody else is either. I wanted to show you something from the Elliott wave theorist, was sent to me by one of our favorite folks here at TFNN. Let's get this up here and take a look at it. This is there it is. This is a Elliott wave theorist from January 31st, and what he's talking about here is the high that was made up here on the 2019 January the 17th. The actual high, I believe, came in on the 27th. If I'm not mistaken. But look at the number of times that you've had a number ending in zeros. Look at this: 1939, 59, 79, 99, and maybe 2019. Remember, 1999 was the dot-com bubble, ended in 00, which was a pretty big drop. So I don't know if that's going to mean much, but all I'm saying is that those Astro things that I looked at that should have dropped came into being between January 10th and the 13th, should have came in. But as Alfie Lavoie told me, and also Bill Meridian, these things, because they're so slow-moving planets, it might take 2 weeks. And it was exactly 2 weeks before that thing turned, if it did. And but these markets move quite a bit. And I know the Fed has things in the market, but I don't know how much they do as far as this or that. But keep in mind, the other thing is last night the gold market. Those of you that trade gold, we alerted you to the fact that we went up to the exact 786 of the last swing high. From 1611 down to that 46, we went exactly to the 786 retracement at 1597. The high was 1598 and change. From there, we dropped $21, and so far we've only been able to rally back about $7, but it's still early in the day. The other one that's very interesting is the bonds. When this market opened, they were expecting the opening calls were starting early in the morning. Late at night, we're about 100 to 200 lower in the Dow coming out of London, but those never materialized. By the time we came close to our open here, it was basically unchanged. And when it opened unchanged, of course, it popped and then started to rally. And this was in face of the DAX being down, the FTSE being down, and of course China getting absolutely massacred. And so people evidently were not paying attention to that. So maybe it means something, maybe it doesn't. My feeling was that if China started to rally, we were going to take off like crazy, possibly. So those are just a few of the things that were going through my little pea-sized brain to see what was going on. But I tried to just look at the charts and not pay too much attention to the news, because the more I hear about it and the more I read about it, the less I care about it. That's about the way that I'm watching things these days, and have been for quite some time. One of the things that I'd like to share with you is some of the research that we've been doing with my good friend John Jameson, and that is we're trying to put we are going to put a little trading manual together, a floor trader's manual. And basically what it's going to do is to use just the simple things that I use, market statistics. In other words, how many times of the day does the market bottom on Monday, rally into Wednesday, all of those things. And using the opening price, how to use the harmonic numbers. And that market statistics also has Fibonacci in it. And then standard deviations from the mean. In other words, when the market moves dramatic from one point to the next, what does that mean? These are some of the things that we're going to have in this manual that I think will be quite interesting, and they're really cool. Let me share one of them with you that we always talk about here, and that is that we talk about the opening price, but let's just blow this up so you'll be able to see it here. This happens to be the S&P going back to when it started in August 16th of 1982. You'll notice that the low of the day is either low of the day will come in within that half-hour time frame between 9 o'clock and 10 o'clock, 9:45. So that's very, very important. That's why they call that amateur hour. If you looked at the other side of this, when highs come in, you'll be able to see that you'll be able to look at it. Coffee and cattle, you betcha, Ruby. For you, we can do anything you want, dear, and we certainly will. Bring up cattle and coffee next for Ruby. Let's take a break. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're going to talk a little bit about the coffee. Once that coffee broke 110, that was really bad. We talked about that. This is straight down move, and believe me, this coffee thing cannot be related to the China thing either. It's just the fact that they're not buying, basically, because they're trying to keep their country together. You know, they've shut down airlines into the country. I mean, you're talking about the second largest economy in the world. You'd think the stock markets would be down, and of course ours isn't, but the rest of them are getting hit pretty hard. Whether the news means anything or not, you know, I don't know, but that's all I'm looking at as we see these things right here. Let's take a look. You can see that coffee just doesn't look like it wants to find a bottom here. I can't see anything about it. The cattle, I believe we're heading lower in cattle. I just bring the chart up. We thought the cattle were topping about 2 weeks ago when we had that little pattern at the top where we had the lower highs, and that's almost a head and shoulders pattern, except the right shoulder is not lower than the left shoulder. It's higher, which is a little tough, but it gives you some good time sequences up in here. And we should have some good support in cattle down at the 61% retracement at 117. Hogs are a whole different story, you know, and I would really be watching hogs, because when they finally turn, they're really going to turn. The trouble is whether they do it in my lifetime or not, I don't know, but they've taken this hog market. And remember, this is going, look where we are, folks. We were 90 cents just a few months ago when we were talking about this terrible epidemic of hog flu that we had over there. Here again, the news is so far behind it. Yes, Starbucks has closed about 80% of their stores. Apple has shut down everything. And, you know, the airlines are not flying in. The three major airlines are not flying into China. So that's going to be, that's going to slow things down. I don't, you know, folks, all I can tell you is follow the charts. If we go below 3,200 in that S&P, we are going to really, it's going to drop a lot. And whether it does or not, I don't know. Maybe it would be. And the no shorting allowed in the Chinese stocks. Thank you very much, David. And you know what that does? That just adds more fear. You know, you can't get out. You can't get out of a burning house. That means it's in really bad shape. So I don't know. Just keep an eye on it. It's going to be interesting for sure, no matter what happens. Oh, right. The next one we had to talk about was the corn. Same thing with the corn. I think, all of these things, first of all, the people in China are not going to stop eating. That much we know for sure. But if we take a look at the corn here, you're going to see a market that has gone sideways now for several months with a low of around 372. High has been 397. We're trading around 379 this morning. It'll probably watch the charts the first time that something, breaks loose. You'll probably see a big up move of some kind. But again, I don't believe that China's going to be in the market, and they're one of the larger buyers of this stuff, I believe. And they're really doing their very best to control this. The people over there, folks, are flat scared. To buy face masks, surgical face masks, is just really, really hard to do. Sarah and I did some shopping for face masks here in Tucson, and we were able to get some boxes, but they're really hard to get. If you try to buy on Amazon, there's a 2 or 3 month wait, and they're not making them in China. And that's from what we heard. Most of these factories people are just not, going to work. The most amazing thing that I saw was a video from a Canadian reporter. He was in the Shanghai Park, which is equivalent to Central Park, and it was nobody there. I mean, it was just really empty. I mean, it was really, really. Dennis asked, which carrier do we use to ship the masks? We just used UPS. And it costs a little bit more to send them, but that's what we did. So we'll see how these things move on to the next one. Okay, there was one other commodity that I wanted to bring to your attention because I believe we've reached a very, very strong resistance here in one of Ruby's favorite commodities, and that's the sugar. We've been up to 14.90. We're trading quite a bit lower than that. We shouldn't get above 15 cents based on the fact that we have got these triple ABCD patterns up in here, so that should be really strong resistance, for the sugar. Remember, Ruby was telling us that it looked pretty good down there at 10 cents, and here it is at 14, so that's a heck of a move. But someone's asking another question, folks. I'll try to make this as clear as I possibly can. I really don't know what's going on with the news and all of these other things with repos and all that other stuff. I focus on what that bar chart is doing, and I watch how the news reacts to what we're seeing. And that's all I'm looking at. I don't have any clue other than that. I wish I did, but I don't. So that's my story, and I'm sticking to it. As far as guests this week, I believe we're going to have the Wizard Wensky on later on, but on the Thursday, we are going to have a very, very special guest, James O'Brien, no relation to the famous O'Briens from St. Petersburg and Boston, is a gentleman about my age who has specialized in the work of Richard Wyckoff, and he is going to bring some information to us, and I think we'll enjoy that. That'll be at 9:30 on Thursday. I've spoken to him a few times, and I think you're going to enjoy it. Wyckoff was one of the folks that I studied, and I believe his methods are just fabulous. He was a friend of Gartley. All those guys stuck together. I don't know if Elliott was in that group or not, but I know that Schaubacher did. He was the father-in-law of Edwards and McGee, and then you had a whole bunch of these guys that were really pretty cool. Anyway, we're going to be on the 9th of February. We're going to have a full moon. Yes, that's correct, and that'll be always as interesting as always. And we'll see what other things that I wanted to mention too. Okay, that's pretty much what we're watching as we go through looking at these things this morning. Let's take a look at. Keep a very close eye on the crude oil, folks. We've had a tremendous move here to the downside, and last night we came in on the open, and we absolutely shattered some really big support areas. Let's get this up so the folks can look at it. And I wanted to bring it to your attention here because once we did that, the market quickly rallied $1.30 a barrel. We're back down to that 150, 110 level, but we got down to 150.40 last night. And the the heating oil took out all of those lows from back in June, as did the crude oil did when we opened. We took out all those lows. There must have been a bunch of stops there, and then we've had a little bit of a rally and a pullback. So sort of keep an eye on that, because it's going to be an interesting one to watch it unfold. So that's what I'm looking at here this morning, so pay close attention to that. As far as the foreign currencies go, the euro had this really big move right off of that big spot there, and all we did so far this morning was back off a little bit, about 40 pips. Now, if this thing is really good, let's just take a look at this euro, because look at the symmetry in this euro, folks. You talk about a market that likes to have a memory. Look at the lows, a 41-day cycle between October and December and February, January the 31st, when it bottomed, right at a beautiful number of 110 and change, and away it went from that level. And so far we've rallied 130 pips from that level. So sometimes these things work, but when they do, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service, Fibonacci 24/7, is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I did want to mention just a little bit about the bond market last night. That I think we can show this if you'll just give me a second. How we rallied up to this 1.618 expansion number. Give me 1 second and get it up here. I think we can. Yes, we can. There, we'll get it up here, and we'll be able to see it clearly. I think this tells us a lot. The fact that the gold and the bonds did not go crazy to the upside was telling us that those stocks did not want to fall down. And the fact that we made that exact Fibonacci retracement on the Dow Jones, you can't make that stuff up, folks. I mean, give me a break. Look at that 1.618 number up there at 164.03, folks. That was made on the open. And believe me, there was very little trading between that 164.04 and 163.29. It came down very, very quickly. And the question that someone has asked me last night when I worked through this is that this is not a three drive to a top pattern, folks. And the reason why is there's really not any symmetry there, and there's not a clear ABCDs. You really need those when you're doing that with the bonds and anything. It has to be, if you have to ask the question whether these things are a three drive to a top or three drive to a bottom, the answer is no. It's got to be that clear. It's going to be just like looking at a painting that shows it very, very clearly. So that's what I'm keeping an eye on this morning. So we'll watch it as we go through here this morning here to take a look at. Okay, now what do we have here? We got the, all righty, let's get this moving on here. Okay, stocks are having a little bit of a rally this morning after the early morning sell-off. Normal. And we'll see what happens to the rest of this stuff as we go through the rest of the morning. If you have any questions, folks, it's 877-927-6648. One of the things that we would like to mention here that Sarah reminded me of, there's so much about the rumors and stuff that are going on over there. It's just as bad as the disease itself. So keep in mind that it's pretty crazy, and you don't want to get involved with it if you can't. Stay away from the rumor mill. It's not a good thing to really be hooked into, for sure. That's what we're paying attention to. Crude oil's back down on the day quite a bit. So it's got a tendency here to possibly get moving over to the upside. And we've got gold. If gold can get above the 1588 level today, folks, it's got a chance to come in because, we only came down $22 from the high, and then we had a little bit of a rally and didn't do much, from the rest of the levels. So that's really what we're sort of paying attention to as we look at these here this morning. And the markets are a little jumpy, as you can imagine, given all the stuff that's going on in the world. Okay, another question someone had was another question about commodities, and if you'll just give me a second here, I will pull it up here, take a quick look at this. This happens to be the natural gas, and I believe we're down here very, very close to, I will cover the British pound, Bob, just as soon as I finish this, and you'll notice here that the British pound got down to this almost 180 level. We're trading around 184 today, folks. We haven't quite made the 1.27 down there yet, so I'm waiting to see a clear pattern. We don't have a clear pattern here in the natural gas, but we're going to be, watching it as close as we possibly can. Okay, the next one that Bob would like to talk about, of course, is the British pound. Had a heck of a move last night. We had a nice rally. And boy, oh boy, we came down 100-some pips really very, very quickly. We're back down to that 131 and chain level. The key support, folks, is at 130. As long as we can stay above that 130 level, it's very, very important that this has a possibility to go a little bit higher. I don't know if it's related to Brexit or not, but that's what we're watching. So I'm not sure what's going to happen. But you know what else, folks? Nobody else is either. That's the whole key. But the pound did sell off quite a bit. In fact, that was one of the things that I was watching last night. Those of you that attended the webinar the other night, here's that's the gold one. Let's just get this one up here. Where is the old British pound? I know it's here somewhere. Shut the front door and raise the rent. What did I do with it? Oh, I think this is it. Maybe. Yep, here it is. Let's take a look here. Here's the British pound last night. get it up here so you can take a quick look at it here. You'll notice that we opened up there at that 132 level. Then we gapped down. You see that on Sunday night. And then we rallied up to the 382 retracement. And then we come down all the way to that 131 and change. That's a pretty good move there on something like that. So keep an eye out that. We'll see what's going on, with these things. Let me double check to see how these markets are doing so far this morning. We're rallying back a little bit in most of these things. Yep, pretty much as expected. Yeah, there we go. We got the gold still coming down. I think gold's made a major top up here, folks. I really do. That rally last night was really a bunch of baloney, and that's really much to do about nothing. So this is the opening indication. Remember, folks, that opening time of the day is known as amateur hour, and that makes it a really big deal. So keep a close eye on that. That's a very interesting thing to pay attention to as you're watching these things unfold. Boy, the NASDAQ really got a kick in the little kabuki right here, jumped up quite a bit. So we're going to see what happens to some of these other things that we got going on. Not too much. Very quiet, actually. Stocks are up 180 in the Dow, up 90 in the S&P, up 90 in the NASDAQ, 22 in the S&P. And, of course, watch that first hour of trading. It's always a very interesting time, to take a look at them because it's very, very exciting, as we know. All righty, let's move on to the next one here, and we're going to be keeping a close eye on the gold market for sure, and we're trading here at 1582. Last night's high in the gold was 1598.50, and as I mentioned, that was exactly a 78% retracement of that high that we had made, previously. So that's an interesting one to watch. So pretty much be pretty interesting to see it to go up. I'm trying to do three things at once. That's why I'm mumbling around here to see how these markets are going to handle these stiff resistance areas that we're coming into, because we had major support there in that Dow Jones on at that 28,100, and we're 200 points higher. We're almost 400 points higher, which is a considerable sum. So we have to respect that with for sure. That's a major thing to keep an eye on as we look at these charts today. So move on here to the next one here, and where are we at here? 875. Okay, good. All right, that's good. Okay, that's a good thing. All right, there we go. All right, let's watch this crude oil, folks. I think that's a sleeper that could be interesting here today. We're down at 51.04. The low we had overnight was 50.40, and it's got some real interesting things to look at. And I believe the gold is heading down, and we'll see if that's going to be a interesting one to watch also. So this is going to be quite spectacular if it ever moves out of this area, 1598 for sure. Folks, all right, 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
The
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we're back, and we've taking a look at the grains. We've actually holding up here a little bit in the soybeans. They're up about a couple of cents after being hit really badly. The corn's still trading at around 379, and it's going to be one half dozen of the other, whether it's going to be a bottom in here or not. But I would wait a little bit to see if these markets are going to hold, especially if we get any slightly good news out of China. It would be quite helpful to the market. But that here again, that is something that we don't really, we're not 100% sure that that's going to happen, but no one knows that. It's very, very skeptical out in here. Another question that someone's asked this morning is about the bond market. Folks, there's a lot of debt out there. I think that's one of the bigger problems that we have in our economy that we never talk about very much. And so I think that probably the main thing to remember here is if some of this debt ever starts to come out and come unglued, boy, that's when the real problem is going to happen, and the Fed is not going to be able to do a darn thing about it. And that's a very important concept, because if you remember in 2008, the Fed dropped the rates 10 times as the market went down and gave back 60% of its value. And we have a very, very, very strong situation here where we could repeat ourselves here because of the fact that we've had these straight up moves and not really much has happened. So let's remember that. It's something that we don't want to easily forget, because it hasn't been very long ago where that really occurred. So if you have any questions, and I'm sure you do, Al says that the old tote board is lit up really loud, so pay close attention to it, folks. 877-927-6648, and we will get moving. Got moving in the stock market again. The gold's holding up okay at around the gold should hold at 1581 if it's any good, folks. And if it gets above 1588, then it's got a really good chance to move in here. And crude oil is still struggling to try to make a bottom. Looks like it doesn't want to do it, but there is a tiny bit of support there. But what I refer to here is tiny. I certainly want to remind you of that. So that's it. The natural gas. Let's take a quick look at it here overnight. This is just what I was watching overnight because we had a little bit of a rally, and now we're coming down to test. I think we've got a long way to go here for another ABCD swing. Let's get this up here. This is really on the watch list, folks, because I really think this has got potential from international things with the oil and all the other stuff that's going on. And it's really clean energy and stuff. So, well, another low down there below that 181 level, maybe to get to 1.7 1.77 is a really nice expansion number of the 127 comes in at 1.77, and the 1.618 comes in at 1.74. 1.74 is what I would really be watching. That's the one I would really take a real shine to, because I think that's the one that, if it moves, it could be the one that would really be quite cool. And there again, we have to wait and see if it gets to that level. But that's what we're trying to do, is to wait till we get to that level. Someone asked me a question about the top in the stock market. Folks, I really believe that top in the stock market was a very, very important thing that occurred there. If you just look at the pattern in the darn thing, that's not a bullish pattern when you break down and then rally back into the gap area and just barely fill the gap. I mean, my goodness, let's just look at that pattern for a second, because I mean, this is one of the most ominous patterns that you can get in the market. So let's just pull it up here so you can shut the front door and raise the rent. What is this one here? That's not good. Let me get this other one up here. What did I do wrong here? Here we go. Let's get this up here so you can see it. And we're quite a ways away. You'll notice the bottom we had here last night was at 32.27. That was a little bit below the 61% retracement that we hit exactly on the Dow. Now we're trading at the 32.50 level. And the high we made the other night was at 3300. Remember, we had that little 4-day rally that went into the gap and filled the gap right at the 61% retracement, and then had the big down day. And it looked like it was going to fall out of bed, but by golly, on Monday, you come in and the markets are higher. So that's why you always have to be prepared and certainly be flexible. That's the bottom line of what we're keeping an eye on here this morning. Okay, Al says there's one line open if you want to call in, 877-927-6648. Another question we've had is about the platinum. Folks, the platinum last night was up about $6, and then it just gave up the ghost and it started to go down. It just does not look very bullish in this area. There should be some support at around 940 in the platinum, but that's quite a ways from where we are right now. So there's another one that looks interesting. So we'll watch it. I'm really following the hog market, folks, because I like these gap downs and I like these patterns that I'm seeing in the hogs. And believe me, the Chinese eat a lot of pork. They're going to need pork. And so we're watching for a bottom in the hog market. I'm going to get our friend Rich Anderson, if I can get him away from his semi-retirement, to talk about these, because I'm keeping a really close eye on the hogs to show some type of a bottoming or an expansion number we can get in and not risk very much. Right now, it looks like it's down about 50 or another $4 or $5 in the hogs before it's going to get major report area to look at. So that's what we're watching here this morning, and I hope that gives you some idea of what we're watching here and some of the other things. Let's see. Yeah, we're starting to. Oh, wow, we got up to 32.55 now in the stocks. Oh, have to love that. And shut the front door and raise the rent. Oh, this is a good one. Okay, this is good, and we're up now, folks. We're up 350 points of the 700 points that we lost on the Dow Jones, from 28,100 up to 28,447. And we're going to find out if it's going to continue running from this level or not. But that's neither here nor there. We're going to find out soon enough, no matter what. Okay, what other one we're watching here? This is really good. See this there again, folks. Let me just show you the importance of that diagram that I showed you. I showed you the lows. Look at the probabilities of the highs coming in. Look at this. This is really an interesting statistics, and this covers thousands of samples. You'll notice that bar on the right there, that shows you that most of the time, the highs of the day come in either right at the opening or right at the close, more probably at the opening. So what are we here? We're in the opening now. So watch this market in the next 30, 40 minutes. It might give you a place to enter a short without chooking around. Ruby says she got stopped out so many times in hogs. You have to remember the story about Paul Tudor Jones. They said, it must be great picking the bottom in bond market. And he said, yeah, the quote should be, I picked the bottom of the bond market after being wrong 6 times in a row. And believe me, we've all done that. We still do it, and we'll continue to do it, because trading is like breathing. You have to have losses in order to breathe, and that's what it's all about, folks. Remember, the most important cycle that we have in our business is the 9-inch cycle between your left ear and your right ear. If you get that one right, the rest of it is easy. Shane called in, dropping by to say hello, and he's going to be on our show tomorrow. I think he's coming in on Thursday, as I recall. That's what I have him as. Let's double check it, but we will have him on. That is for sure. Yeah, tell him to call in for the next segment. You bet.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, folks. I believe we have the Wolf Trader on the line. Shane, are you there?
Good morning. Good morning.
Good morning to you, my friend. We're a little shell-shocked with all this volatility. What are you showing for us today, buddy?
Well, I just would like to point out that I think the market has held up relatively well with this coronavirus, and you can see the difference. If you look at copper, that the amount of selling that's come into copper versus the equity market. And I think the basic difference there, of course, is the Fed. I think they've done a good job when that first day when it reversed, I think it was Thursday, they had really big purchases coming in that day. And then, of course, Friday we were down. But on balance, if you compare it to copper, I mean, you can see that they're doing their job. They're keeping this relatively contained. So we'll have to see going forward. I just wanted to point that out, that I think that's remarkable that it hasn't gone down more with all of this corona scare going on.
Are you still going to come on this week and give us a little presentation?
Sure, absolutely. We just got started the other day. There's so much to talk about, but just wanted to just point that out, that I thought that was remarkable about that we haven't had more of a decline in the S&P. So.
I have to agree with you. Yeah, considering that China was down 8% and we were rallying strongly, that was a tip-off. You had to be really careful. That's for sure.
Yes,
that's something pretty cool. Well, listen, we'll have you on soon, and thank you for calling in. We always like to hear from you, my friend. So
no problem.
All right, take care of those beautiful children and lovely wife.
Thanks. Have a great week, everybody.
You bet. Okay, thanks, Shane.
Okay, bye-bye.
Bye. Shane Smolian, the Wolf Trader, will be on this week, so we'll have him, and we'll also have Norman Winsky on also, so we'll see how some of these things are unfolding. We had a big move on these stocks here in the first hour, so very, very closely watched. That'll be a very interesting one to pay very, very close attention to. The gold's breaking down hard, much like we expected it would, so we'll see if this is going to be a bigger move. This gold is just acting very, very poorly. In fact, in case of the news, folks, it really is. I know it runs opposite the stock sometimes, and that's in fact what we're seeing, but that's neither here nor there. Sometimes it goes the exact opposite. We got the crude oil up now to 51.31. If you bought that stuff down there, put your stop at 50.90 and let it rip. That's all I can tell you, because maybe it'll work and maybe it won't. Who knows? Live every day in an attitude of gratitude and may God bless.